Hi guys, welcome back. Wow, another bloody day today. Not for the US stocks, only for the Chinese stocks specifically. Ha ha ha. It's enough pain for us already, so let's keep this video a little bit less serious. A little bit more chit chat. Last time I remember this pain, it was the beginning of December, this day, December 3rd, when the Chinese stock sector dropped 8.45% in total. During the day, it was 10% and then recovered a little bit during the closing. And this time, it's worse than last time. It's really close at near 10%. So today's movement was actually very similar to that day. Remember, we make a live video on that day because it was just so painful to watch. Today I thought about making a live with you to go through this too, but I realized that maybe you don't want to hear me on a day like this. It's just so bad because it was specifically news driven by this delisting news about the SEC listing 5 companies that is not complying with the new law, which is to allow the PCAOB to access their auditing reviews. So as a punishment, these companies would be delisted, including Yum, Beijing, ticker symbol BGNE. This one is the #1 heaviest position for Hillhouse Capital. That's why I always have pay attention to this, as just one stock alone takes up for about 1/5, 20% of their whole portfolio, which is quite a heavy position. So this is actually a big punch for Hillhouse too. It is a good company, but unfortunately can't escape. So today is a lot like December 3rd when Didi announced to be delisted and get listed in Hong Kong. And that news alone drove the whole Chinese sector down 10%. Every stock, basically every Chinese stock, minimum 10%. Okay, if not 20 or 30%. So today is another bloody day just like last time. The SEC do not want us Chinese stocks investors to have any days of comfortable. It's like, nope, you guys choose to invest in Chinese stocks, so it's your own fault. So you see, just like last time, dropping about 10% in the whole sector with the spike of volume. Panic selling. But unlike last time, this time is much worse than last time because back in December, the S&P 500, the US stock market, did not fall below the bear market trend line. So it was still in a bull market. So things would look a lot less ugly than right now. Right now, not only the Chinese stocks is facing this delisting threat again, but also the S&P 500 has officially fell out of the bull market trend line, so this would make the selling or panic selling effect much worse. So keep that in mind. So news like this drove our stocks all the way down minimum 10%, if not more. So Baby Neo is down 11%, kind of average. I would say a little bit more to the handsome side. And Pinduoduo down 17%, of course. Luckin even is down 15%. Xiaopeng is somewhere not as much of a devil, 9% only. Li Auto 5%. Good enough. LKCL 11%, average. ZEP 10%, JKS 17%. The giants are the worst actually. JD.com 15% with the earning today probably makes it more traumatized. Bilibili 14% down. I would say today the large caps took more of a hit than the small caps. But the brightest star was really YSG. Wow, 40% down in one day. I think this is the delisting news plus the earning that was not up to expectation. But the earning, it's up to the Wall Street to interpret. Personally, I think it's not as bad as it looks. Sure, it's missed the revenue, but it also shrank the net loss by a big part as well. So in this kind of market, when the companies would have difficulties to raise funds, I think it's not a bad idea to cut cost, even if it sacrifices the reduce of revenue. So I don't have a big problem with this earning, but For sure, the Wall Street had taken the advantage to drive it down further because why not take on this kind of news to make it more panic selling, right? Short it all the way down and make more profit. This is kind of getting in a euphoria for short sellers of Chinese stocks. But the most ironic one is BGNE because it was the one that's taking the biggest hit because it was directly named to be delisted. Like Didi last time, but different than Didi, who dropped 22% in one day on December 3rd. BGNE actually only dropped 5%. Only in the morning, it opened up and kept selling off from 182 to all the way 162. So at most 16% down, but during the market hours, it had recovered most of the loss. So up 10%. Usually when something like this happened, like last time with China Mobile and Xiaomi at the beginning of last year, somewhere around January 2021, usually there would be someone buying the dip up. So I am assuming it would be the government fund. You know, Chinese people need faith. So at least the one that's named out there to be delisted should be saved first to preserve some faith. The last dignity we have, right? It's too bad I didn't see it early. Otherwise, I would have jumped in the morning. Nice dip to catch, actually, just for a day trade. Because don't forget, Chinese people, Chinese government needs faith. If it's delisted for political reason, like government secret or threatening for association with military, etc., it might be more dip buying from the government fund. At least on the same day. Don't know after that, but at least for the same day, it needs to preserve face. So there would be some dip buying. But the brightest Chinese stocks today is really Yihang, EH. Who would have thought, really? At some point, it was even flipping green, up 2%. It was the only one green in a pile of red for hundreds of Chinese stocks. Crazy. It was the news driven by some pre-order from Malaysia. So guess give it a little bit boost. But for now, it looks like my last support that I pointed out a few days ago at 10.9 is still holding it. It was the last hope I have, so I bought the dip on that day. And for now, it's not broken yet, even on the day like this with such bad news. I hope it can remain strong like this and recover slowly. I hope my last support does not get broken because I have strong hope that EH would be getting the certificate in Q4. So there is a giant catalyst coming in the short to medium term. I think it would be dumb to jump the ship right now after holding this for so long. So Luckin has been holding through well in this correction. Even though the HSI was crashing, Luckin was going on the sideways, going pretty strong, even green on some days, right? You know how I said Luckin is kind of like a hedge in the Chinese stocks. But recent days, could not hold it anymore and finally gave up. You know what? I'm just gonna dive with the rest. I'm gonna join the rest of the group, right? So today it also dipped 15%, even though it should not get affected by the delisting news. Why? Because it already got delisting long time ago, 2 years ago. So this is not a news that would affect Luckin. So at some point during this 2-3 days, yesterday, I saw Luckin is dipping back to the range. I thought, maybe it's time to buy in Luckin again, since you know that I have offloaded all my shares between the range of 12 to 15. So I thought maybe this is back to the range where I think I should be accumulating again, right? So I really wanted to make an order to buy back Luckin. And then I saw, I think it was last 2 days, that the PB ratio was 7. A week ago, it was 9, okay? So PB of 7, 9, or even 5 right now, it's considered quite expensive in the Chinese stocks. I cannot believe it that I'm saying this for real, that Luckin Coffee has become one of the most expensive Chinese stocks you can find. Oh my god, I cannot believe I would say something like this. There's no way I would have thought about this 2 years ago when I bought Luckin when it was $2, $3. The PB ratio was 0 point something. It was holding more cash than the whole market cap. And right now it is sitting at the PB ratio between 5 to 9, sitting at one of the most expensive Chinese companies you can find. To give you an idea, take a look at the glorious giant Alibaba PB ratio of 1.6. Baidu PB ratio of 1.4. Tencent slightly better, but still just 3. Futu PB ratio of 1.4. JD.com PB 2.4, Bilibili PB of 2, JKS PB of 1.3, Didi PB of 0.9, YSG PB of 0.5. So you are buying the share price at half of the value it should by the book. So therefore, I can't believe it that Luckin Coffee, after it has delisted, after it has committed fraud, after so many investors lost confidence in it and degraded the trust or investment value, it is sitting at the most expensive level for Chinese stocks. I still cannot believe it. This is so ironic, so sarcastic. Who would have imagined that 2 years ago, when Luckin Coffee had committed fraud and crashed 95% of the share value, that one day it would become the most expensive Chinese stock? Huh? So now you know why I say that, and many people ask me why I'm not buying Luckin back. It's just so hard. I really wanted to, believe me, but when I see this comparison, I just can't help it. I have to buy the dip for the others that in comparison look so dirt cheap right now, because we're talking about technology companies, internet technology companies that always deserves higher value because of the nature of the business, the margin level, the potential and the speed it can grow. So right now, all the internet companies have dipped so much that their PB is just around 1 to 2. Normally, you would be seeing them sitting around somewhere between 5 to 15. But they are right now so dirt cheap. I mean, look at Ken. I just find it so laughable. PE ratio of 2. PB ratio of 1. My god, how much cheaper can it get? Well, it's already better because 2 months ago it was sitting at 3.5. So PE at 1. This is so crazy. And Xunlei, PB ratio of 0.3. I know it has the threat of being delisted, but so what? Most of these companies right now, like Baidu, Alibaba, even NIO now, Xiaopeng, Li Auto, they are all second listed in Hong Kong. So maybe a few months ago when you bring out the delisting news, it's scary because you don't know what's going to happen to your shares. Once they are delisted, would the company privatize? But no, right now, all these companies, most of them are second listed in Hong Kong already. So what is that? It's so scary about. While you know that anytime you can swap your shares to Hong Kong, anytime you can do that, if you have a broker that supports it. And I believe that most brokers would start to connect to the Hong Kong stock market if they want more business. Otherwise, a lot of people who have Chinese stocks would switch to brokers like Futu, which will give them a lot of business in the coming 2 or 3 years when these Chinese companies actually have the threat of being delisted, right? And if these brokers don't want to share their part of the business, they would find ways to connect to the Hong Kong market. I don't know exactly how and when, but I think this is what they are thinking of right now. And by the way, I think it would give Futu a lot more business in the coming years because I'm sure a lot of investors internationally still holding many Chinese stocks. Like Alibaba, very popular among the retail investors. A lot of people follow Charlie Munger on that, right? Either Charlie Munger or Ray Dalio, they're very well respected Wall Street institution or investors. That's why their opinions a lot of people value and follow the trade. And I am quite sure that right now a lot of retail investors still holding Chinese stocks, even with so much storm we have seen. Especially, it's so hard to cut loss when it's so much down. So they're gonna find ways to connect the shares in Hong Kong. So either the brokers would start to connect or Futu would be getting a lot more business. So recently I have been wondering why Chinese stocks or HSI just keeps on dipping, crashing endlessly without a bottom. Why would the short sellers just keep shorting it so heavily even though the US stocks had rebounded so much? I really did not understand why, and now we do. It's because these institutions, they knew this black swan is coming. They always know the news before us, so that's why they have been shorting it. So right now the news is out. I hope we will see the bottom near, because the news is always delayed when we know about it. This is usually the time the short sellers would start to take profit. Now, I do think if you are not afraid, if you are brave, you can refer to my last video for some target buying prices for the Chinese stocks. For EH, it has not dipped below my support and buying price yet. And Xiaopeng as well, the support of 25 is still holding. So let's see. For Alibaba, I think I gave it the range between 86 to 89. Today it had reached 90, so it's getting close. For JD.com, I think the support of 50 would be a good support, because look at the weekly chart. Today it had dipped to exactly the 250-week moving average and bounced back off. You see, precisely, to be 50.66. Today it got to 50.60. Close enough. I think JD is also might be a good choice. At least the 50.6 would be a good short-term support. So I expect to see a short-term rebound, at least, right? Because last video I did not talk about JD, so today I want to briefly mention it. And then I point out to you that JKS also dipped to the last video's price target, which is around 46. Because I said that JKS had done a nice breakout, so if it can backtest this trend line, it might be a buy-in opportunity. And today it did backtest this trend line. If it doesn't hold, it would have the potential to backtest here. I already bought the dip today, so if it backtests again to the lower trend line, I would add more. Okay, now that's it for today. I know it's been a very, very rough day for me as well. But on a day like this, it's really to challenge our conviction and market psychology. So stay strong, stay calm. I believe the spring would come right after the winter. Look forward to Q2 and Q3, okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.